Have you ever wondered how global trade deals and tariffs will actually impact real estate? Whether you're buying, selling, or investing in properties, tariffs play a surprisingly big role in shaping the market. And it's not just in the United States. Canada and Mexico, they're going to feel the effects too, thanks to trade agreements and these cross border economies. I'm giving full disclosure here. This is not a political video. I'm only trying to give everyone a point of view and figure this out myself. Is hey, I'm not an economic genius or a politician, just in real estate, and just thought I'd take the best approach on how I could help myself and others understand all this. So anyway, let's get back to it. Now, we've all heard it through the election about these tariffs being raised on countries like China, Mexico, and Canada. And in fact, here's just a few clips of that right now.
I always say tariffs is the most beautiful word to me in the dictionary. We will tariff and tax foreign countries to enrich our citizens.
Donald Trump's latest comments on imposing tariffs on Chinese goods. The U.S. president said his administration is considering introducing import taxes of 10% as early as next week.
Now, first off, what is a tariff? Tariffs are taxes on imported goods. Governments impose them to protect local industries or as leverage in trade negotiations. But for real estate, these taxes can make construction materials more expensive, slow down projects, and even impact property values. Now, as an investor, understanding these tariffs is crucial. They affect everything from the cost of building new properties, rehabbing existing homes, to pricing of rental homes and also commercial spaces. Now let's dive into how this all plays out, starting with the materials. Now, tariffs have hit construction materials hard, and it's a major issue for real estate across North America. In the United States, tariffs on Canadian lumber have been a hot topic for years. And did you know that over 25% of lumber used in the United States actually comes from Canada? And when the United States imposes those tariffs on Canadian softwood lumber, prices spiked, sometimes adding thousands of dollars to the cost of building a single home. Now, from an article from the National Association of Home Builders back in August of 2024, it stated, the United States Department of Commerce today raised tariffs on imports of Canadian softwood lumber products from the rate of 8.05% to 14.54%, following its annual review of existing tariffs. Now, for years, the National Association of Home Builders has been leading the fight against lumber tariffs because of their detrimental effect on housing affordability. In effect, the lumber tariffs act as a tax on American builders, home buyers, and also consumers. Now, in Canada, builders face rising costs for materials like steel and aluminum, especially when importing those from the United States, and those higher costs trickle down to their buyers and renters as well. And in Mexico, tariffs on imported materials, combined with local supply chain challenges, mean higher costs for those developers, especially all those relying on the United States or Canadian goods. Now, for real estate investors, this means tighter profit margins on new builds, fix and flip projects, and renovations. Tariffs don't just increase costs, they also disrupt supply chains, and if developers can't access affordable materials, they build fewer homes, which creates a ripple effect. Fewer homes means a tighter housing market, which again will drive up the prices. And rental rates rise as supply shrinks, which might sound good for landlords, but it can also increase their risk, higher tenant turnover, and also affordability challenges for those tenants. And in markets like Toronto, Vancouver, and Los Angeles, where housing supply is already tight, tariffs worsen affordability for everyone from first-time buyers to those seasoned investors. Now let's just talk about the trade agreements like NAFTA and its successor, the USMCA. These agreements were designed to promote trade between the United States, Canada, and Mexico, but the tariffs can still always sneak in. And for example, the United States imposed tariffs on Mexican steel and aluminum in the recent years, which raised construction costs for developers relying on those materials. In Canada and the United States, they frequently clash over softwood lumber tariffs, creating uncertainty in both markets. According to Housing Wire again, the National Association of Home Builders said sawmill curtailments and closures in North America, especially in Canada, are impacting supply companies like Western Forest Products and Camphor, which reduce production due to weak demand and high U.S. tariffs. And it's not just raw materials, as items like garage doors, air conditioning units, and dumpsters may also see a price hike. Now, Trump's previous tariffs included up to 30% levies on steel and aluminum, raising construction costs across the board. And as a real estate investor, these trade tensions can affect your bottom line. Imagine budgeting for a project only to see material costs skyrocket halfway through. I mean, it's a real challenge out there. And here's where it gets interesting. While tariffs can create challenges, savvy investors, you can still adapt and even thrive in the environment that we're in. And here are a few strategies that you can focus on. Obviously, you can diversify your portfolio. Try to invest in markets that are less affected by tariffs. For example, some regions rely more on locally sourced materials, making them less vulnerable to trade disputes. Also, focus on value-add properties. Renovation costs might rise, but value-add properties can still offer strong returns if you focus on high ROI or return on investment improvements. Now, you can also try to partner with local suppliers. Avoid heavy reliance on imported materials by working with those local suppliers who are less impacted by the tariffs. Now, here's another indirect impact of tariffs: inflation. When tariffs drive up costs for goods and materials, inflation, it often follows. In fact, central banks like the U.S. Federal Reserve and the Bank of Canada, they can respond by raising interest rates to curb inflation. Now, for real estate investors, higher interest rates mean higher mortgage costs, which can also lower your cash flow from rental properties and reduce demand for home purchases as those buyers, they get squeezed out of the market. And tariffs also impact commercial real estate. For example, warehouses and distribution centers, they rely heavily on those imported materials, and tariffs on steel and aluminum raise construction costs, which that landlord's going to pass on to the tenants. And retail spaces, they feel the pinch too. If a retailer faces higher costs due to tariffs on goods from, say, Mexico or China, they may downsize or delay expansion, impacting the demand for those commercial spaces. So what's the takeaway here? Well, tariffs are a wild card in our real estate market, and whether you're in the United States, Canada, Mexico, understanding how they influence construction costs, our supply chains, and interest rates is very critical for making those informed decisions. Now, here are a few practical tips to stay ahead of this. You can obviously monitor the trade policies, stay informed about those tariff updates and those trade agreements, and also plan for cost overruns, build a cushion into your budget for material price increases, work with experts, collaborate with those contractors, real estate agents. And by the way, if you need a good real estate agent in your area, my contact link's down below. Reach out anytime. And also suppliers who understand the local markets and can navigate tariff-related challenges. Now, tariffs might seem like a complex global issue, which again, for me, still trying to understand it clearly, and hopefully we kind of broke it down here today in a little bit. But their impact on real estate is very real in my eyes. And whether you're flipping houses, buying rental properties, or building new developments, understanding these dynamics can give you a competitive edge. And if you found this video helpful, please share it with somebody else who can benefit from it. And also, please leave your comments down below again, as I'd like to hear your input on all this, as we're all trying to, I guess, further understand what's going to happen. And again, if you'd like to discuss any of this, my contact link's down below. I'd love to hear from you, and we will see you next time.